Well, good morning, everyone. Good afternoon, good evening. Welcome to Traders Around the World. Welcome to your trading morning with me, yours truly, Z. I hope folks are doing well. Give me a good to go on the AV. I just want to make sure that the stream is coming in nice and loud and clear. And of course, you're getting an image of me, so you should see a slide up. Everything all right and ready to go. Well, it's been a bit of a whirlwind in this market, hasn't it? Lots of tradability, that's for sure. That's something I did promise at the beginning of the week that Wednesday and Thursday are very likely going to be the days you want to use your dry powder for lots of tradability. And certainly that has happened. Well, a very, very good morning to you. And I hope that you and yours are doing well. Looking forward to navigating markets here with you as we move through this market morning. And I am excited about trading here with you. So let's actually get right into it. Give me just a second over here. I am just trying to make sure that all of my bells and whistles are all clicked off the right way and on the right way, etc. All right, looks good. So everything seems to be good. Welcome to all the new folks joining us today. Looking forward to navigating markets here with you and being on this journey with you. And it looks like everyone is good and situated. Well, I'm not going to say hi to every individual person because everyone's writing in. So I will say very good morning, good afternoon, good evening. Welcome to one and all. Let's get right into it, folks. Okay. Now, everything that I do and say here is for education and insight purposes only. It's not meant as advice. I'm not a registered financial advisor or representative. You must consult yours before making any trading decisions. Trading involves risk, not just reward, risk of loss. Trade with money you can wholly afford to lose. When I trade, it's always in line with my risk trading plan, which is unique to me and might not be suitable to you. Consult your registered financial advisor and get a risk trading plan. When I discuss past trades taken, do live trades in front of you, come up with potential future trades with projections, whether I'm doing so with respect to a live cash account, a demo account, or a prop trading account. I'm doing it all for education and insight purposes only. It's not meant as advice. Finally, if I poll you in the chat and I give you an average response back to that poll, the sentiment there is not necessarily indicative of the sentiment of the entire group, just those responding. I don't audit the chat, so do take that stuff as anecdotal. Okay, I think we are good to go. So let's get right into the market move. A little just in advance of anything else, I just want you to know that I am babysitting a little pup today, not so little. She's about 15 years old and moody. So apologies if you hear a little cooing and cawing and that kind of stuff. I'll bring her on screen and satisfy her ego at that point to calm her down if she needs to be. All right, let's get started. So here we go. We'll start off with the big picture charts. So what I want to do is just bring up on screen big picture charts to make sure that we understand where we're situated. And then, of course, we can go from there down into the technicals in the now. So you can see that we're in this long-term uptrend channel, long-term uptrend channel. And we've broken below the center of the channel, but we're trying to get back up above the center of the channel. Now, this is the primary market. This is the S&P E-minis. So it's more balanced than the NASDAQ. The NASDAQ is more skewed to the Mag 7 stocks in its composition. Now, when we take a look at the S&P, this is the area of focus at the hard right edge of the screen. We're going to zoom in on that. So now what you can see is the green candle on the day today showing us up about 1%, just shy of 1% versus yesterday's close, has taken us back to and slightly above the center of that long-term channel. That's the center line. Now, what you heard from me on the week is I'm expecting Microsoft and Meta, Apple and Amazon to pick things back up and actually push this market back up in towards the 75-55 area. Is that still on tap? Well, I'm hard pressed to believe we'll make it all the way up there and through, but I am still supportive of the market trying to hold up, modestly push up, and then after we end up hearing from Apple and Amazon, after the bell today, Friday at some point, we start coming back down again, likely. Now, you have to note that into the middle of the week, we have come down to the bottom of the weekly pivot range. So you see these numbers running through the right-hand side of the screen over here on chart, not on the axis, on chart. These are weekly pivot levels. They're Fibbo and DeMark weekly pivot lines superimposed on daily bars here. And we know the center of that long-term channel is the black diagonal line. That's the black diagonal line right there that we're working to get and hold above. Holding above that number means being and holding above roughly 74.03. We're sitting at 74.06 right now. we're already up 1% on the day. And so far, early in the week into the midpoint, we've already used so much of the range to the downside that an oversold bounce can take place, but it will require other constructive events to really build on and actually trend up from here. Nonetheless, we're doing a fairly decent job of coming up off that low. Now, the poison pill to this move can be the NASDAQ, of course. So we know Microsoft up, Meta down. I haven't looked at the numbers right now in the pre-market, but I can tell you that the call was that Microsoft is likely going to help lift the market back up. Their allocation decisions are probably going to be seen as better relative to what we saw from Tesla and Alphabet last week. And it seems like that has been the case. You heard that from me first thing at the beginning of the week, and you're seeing it in market now. What you're not seeing in market is that push up to 75.55 and through it. So I was not right about that, but we have flight paths that we put out for active trader room members, and we've been following flight path B. So we've always got a backup plan in the case that the market does not cooperate with what we're looking for. And that backup plan has been plan B. Plan B effectively involved us coming up to the 75.55 area, facing resistance, double top formation, coming down, breaking through the mattress, the center of the weekly pivot range, and swinging all the way down to the bottom of the weekly pivot range. So we've been following largely that flight path. Are we now going to, since we're still, we've got today and tomorrow to trade, are we going to get more upside? Are we going to come up through the center of the mattress and start to try and challenge that 75.55 area? Now, again, that's published in a PDF format for active trader room members. You've had that since the beginning of the week. And of course, it's not changed. It's presented once. Now, what you're seeing over here effectively is a rise that's taking us up above the center of that long-term channel. Okay, above the center of the long-term channel, but we're not yet back up above the center of the weekly pivot range. So the game plan right now is very straightforward on the S&P E-minis. If we are able to hold above 7,400, let's just keep it a round number, we're trying to project up to 7,450 to 7,475. Okay, so that's the trading landscape that we're trying to play through. Now, if we're below 7,400, where are we coming down to? 7,380, 7,353 would be the two markers that we're looking for. Below 7,400, it's 7,380, and then let's just call it 7,350. Let's go do this for the NASDAQ. So the NASDAQ as well is in a long-term uptrend channel starting in October of 2022. It spent some time above the top. It came down. It broke below the center of the channel. It's still below the center of the channel, but it's trying to get back up and above that center line. Let's zoom into the hard right edge over here. So here's the NASDAQ. What are we looking for here? Well, what are we looking at? A very pervasive downtrend, very far away from normal on the downtrend channel starting on June the 22nd. We've come down below that dark green line, which is 2 standard deviations below the center of the channel. We're trying to bounce back up to the center of the October 2022 channel. That value is, as of today, sitting at, as precisely as I can get it, 28,165. So 28,165. In order for this market to actually stabilize, it does need to get back up above that number. It needs to get back up above 28,165. Now, we've obviously used up the entirety of the weekly pivot range and then some, closing below the bottom of the weekly pivot range yesterday, opening up yesterday at 6 p.m., down below it, and then reversing right back up. Now, I've got a volume point of control line starting on the 28th, sitting right in and around 27,975. So about 100 points higher than where we are right now. If we are to actually make a run for the border being 28,165, big number, important number to write down, 28,165. If we're going to make a run for the border up to that area, we do need to get above that volume point of control, sitting right in that 27,975 area. Getting above there really does open the door for us to continue on towards the border and then potentially a little bit more on top of that. Now, just keep in mind, the NASDAQ is already up 2.2%. I'm not expecting another 2% to be added on the day. That's not a reasonable expectation. Could we see another percent added on the day? Potentially. Let's be realistic about that and take a look at what that means in terms of if we add a percent, where is this market going? So if we add a percent, we're coming up to the border. That's about 300 points. We're coming up to the border. We're not coming up through the border likely. Okay, so that's an important insight right off the bat. We're already up 2.25% right now. Adding a percent to that is probably the max that I would expect without having another bullish catalyst introduced into the market. Another bullish catalyst could be what? Geopolitics cool off. Okay, we've seen back and forth on that. Okay, that could be one that happens during the day. Otherwise, it's after the bell. It's Apple and Amazon after the bell. So there is a very real risk here that we exhaust the upside. We don't have as much fuel left because we've already come up so much. Now, if on the NASDAQ we start coming down anywhere really below 27,750, and we're going to look at this with the technical tools in just a second, but below there, things can start to come unglued again. I don't think the market's coming back down to lows that we saw at future session open or yesterday's close. I doubt that that would be the case, but we could retrace half and still likely bounce back up. So I hope that that's a fairly clear insight. The market has already started trading for 10, 15 seconds. Let's get right into the market move right now and get a sense of what's going on. So here you go. We've got on the left-hand side of the screen, an hourly chart, middle of the screen over here, a 5-minute chart, and right over here, a 1-minute chart. Immediately out of the gates, we're seeing some selling. I'm looking at the structures of support and resistance that are presented on chart by our technical tools. We've got the wealth chart member exclusive indicators on chart, inclusive of the spike 2.0. We've got the champion trend pack on chart, and we've got the triple S indicator package on chart. Yep, there's a lot on the screen, but I'm going to help you navigate through things. So right now, what are we dealing with? Well, the triple S indicator on a 1-minute chart is in a buy signal state. That buy signal state needs to get more robust, but it's a little hard of an ask because if you look at the absolute values of where the triple S line is, it's in the upper 50s. It's overextended. What about on the 5-minute chart, which is really the day tradable chart? We're in a buy signal state on the triple S tool, but we're at the top of the channel, right? We're already very extended. So if we have a brief foray higher, that would be great. A pullback, consolidation, and then another run up would be more ideal to trade on the long side. Okay, a pullback, consolidation at a lower level, and then starting another run up would be a more ideal way to take on longs. So right now, if we're going to go and look for trades right out of the gates, well, we've pushed up, we've come up, made a bunch of these negative divergences. You can see those red lines kind of toggling on, toggling off, but we've broken through a negative momentum shift, which is that red ball and white line. We're above the speed lines. We're in a champion trend pack buy sequence. We're in a triple S buy sequence. So all of that's good. All of that is there. Nothing has really changed about that. The question mark now is, are we a little too overcooked to be able to continue higher? So what I'm seeing from my indicator, the triple S indicator, is, yeah, we're a little overcooked right now. Are we going to start off this market morning with a pullback, come down into a consolidation, a support zone, build a base, and then continue on with the risk on move that we're seeing in the market? Well, I think that that might be the case that we're dealing with here. So as of right now, I'm seeing a pullback that's not dramatic. We're coming down into rising support. I don't see a great trade at this moment in time. I've got a very overcooked condition on the 1-minute chart in terms of absolute values, and the triple S line's not even in the upper half of the channel. So no real decision for me to take on a trade just as of yet. But I'm going to, parse through the indications and the behavior here. I'm also looking at the ES on another screen. I'll bring that up on your screen right now. For those who are trading the ES, are we holding the 7,400 line, which is really that big marker? The answer is, yeah, we're holding the center line of the channel. Hey there, Naveed. Hey to everyone that wrote in and those logging in right now as well. So we're holding that center line, but we're still in a very similar state between the ES and the NQ. We're very overcooked on that 1-minute chart. In fact, we're overcooked enough that if we start pulling back, I could actually get a short down to 7,400 right about here, but it's a high risk trade. If we break the center of the MSR, I'm going to try a quick trade here. I'm in it right now, fingers on the trigger to get out. If it does not want to cooperate, it's not cooperating greatly. We get back up above the top of the MSR channel. I get out of the way, but right now I'm 10 seconds in, first trade of the day, profitable. There you go. Now I've taken a high risk short because I saw an opportunity for a little pocket where things can come down. But I don't think the market's given us the signal yet that it wants to pull back to really consolidate at a lower level. You can see the reversal that's happening right now. Can I play that reversal to the upside? Look at the absolute values of the triple S line itself, the red line, the soldiers. It's in the mid 50s. It's expensive. it's not an area where I want to take on longs. So you saw me take on a short. Can I do it again? Potentially. This time, it would require me breaking below the bottom of the MSR channel. 7403 is the exact number of that big long-term channel in the center of the channel. I'll consider it below there. If I'm going to take a trade below 7403, where am I trading it down to? The upper half of the 5-minute chart's MSR channel, which is between 7,400 and a half to 7398. And that might become a thing in just a moment. My finger's on the trigger. I'm not depressing the button yet. I'm seeing, double green dots from the triple S tool go to single blue dots. Speed lines are in a bearish crossover. I need that red triangle on screen above the top of this bar if I want to short. Otherwise, I'm just going to back off and let the market decide how it wants to act. Okay, we're coming down. Are we going to break the bottom of that 1-minute chart MSR channel? If we do, we can have a little whoosh. 3 to 5 points would be the idea. It's not a grade or B grade trade. It is a C- grade trade if I take a short. It is the lowest grade I can give to a trade. So I'm letting you know that in advance. It would be the lowest grade I'd give to a trade because we have no signal alignment, right? The 1-hour chart, yes, is on a sell signal, but it's evacuated it by and large, right? We've got blue dots on the 1-hour chart over here. Yeah, the sell signal did happen yesterday afternoon, the 3 p.m. hourly bar. Now, if I want to take on a long, okay, the hourly chart's trying to flip back to long. The 5 minutes in a long, the 1 minute's in a buy signal state, and we're seeing a rise right now. I'm not going to just flip the script and jump to long. I'm still dealing with a very overcooked condition. But if the NASDAQ is actually pulling me up, I want to take the trade on the NQ more so than the ES. So I'm going to pull the NASDAQ back up on your screen over here, and let's see what's happening here. It's breaking through resistance. It's breaking through the negative divergences. The impulse to buy is strong, and at this stage, it's pulling the ES up. We're at 27,915. We need 975. That's one of the markers that I identified for you, one of those volume point of control lines. The hard part about trying to play long over here, I was effectively considering using the NASDAQ's thrust higher to actually go back and trade the ES long. I'm still considering that. It's just so overcooked at this stage that there's not a lot of bullish fuel left. I've seen this movie before. I'm sure you've seen this movie before. Things start to look good. We start to come up. We start to break out. We're already up a couple of percent on the NQ, more than a couple of percent. Everything looks like it's going to continue, and then whack-a-mole back down. And it can be a violent one, right? It can be, dozens and dozens of NQ points all at the same time. So I want to be very careful with that. That's why I'm considering, hey, look, if it wants to continue, if I want to challenge myself to trade, long side trades are better, but they're still in a market that we've used up most of the bullish fuel in the pre-market action. If we get pushed back up somewhere above 27,900, I will consider taking a long on the ES from that. Otherwise, the NQ starts to hammer down on this 1-minute chart, breaks the MSR channel bottom, 27,835. That probably will be, because we've already done it once, we broke below. That probably will be good enough for a short. And it's in motion right now. I'm considering taking the short on the ES and on the NQ or on the NQ. But again, it'll be a C- grade trade because we'd only be signaled down on a 1-minute chart. Hey there, Nathaniel. Good morning. And Fouad, you're absolutely right. Technical damage on the 1-minute chart is evident with the technical damage tool. The MSR channel has gone from green to magenta. So less efficacy, that's for sure. But I'm still seeing the ES actually, what I'm seeing right now based on the interplay of the two indices is the ES is trying to pick up some of the slack for the NASDAQ. And when it's not, the NASDAQ has been thrusting up prior and trying to pull the S&P up. So they're actually working together fairly well, which is a good thing. But I'm not seeing quite enough of what I'd want yet for a long. I'm not going to see it for a while likely, but I might take an opportunistic long. Because technically I would need a pullback, a consolidation at a lower level, get ready then to ramp up and go again. Effectively go back to the pit stop we passed, 50 miles back, refuel, rejuvenate, and then go. But if an opportunistic long comes to play, we're above 900. The ES is still having problems while the NQ is trying to get above 900. So no trade. No trade at this moment in time. Yeah, and any shorts at this moment in time is... shorts are a C grade trade at this moment, C- grade trade at this moment. I already took one. It was very opportunistic, right? I want to take another short if we get an actual breakdown below structures on a 1 minute chart at a bare minimum. If we're getting pushes up off of rising support on a 1 minute chart, it's a different story. Now, you can see that the NQ is holding on. The ES is actually having a lot more of a struggle at this stage, and it's breaking, and I'm going to take that short right there, right now. It's a high-risk short. It's a C- grade trade. If it gets sucked right up on against me, I'm going to have to take an L and get out of the way. Still willing to hold it up until the center of that MSR channel, but the center of that MSR channel is the problem area. It can get pushed right back down. Let's go see what the NASDAQ's doing. It's coming down as well at this moment. My trade's still out of the money. I'm going to pull that back on screen for you. If this NASDAQ bar goes green and pushes things up, I'm going to have to bug out of my ES trade very, very quickly. It's in the money slightly right now to flat. You know what? I'm taking profit on this high risk, crappy trade. I got $100 off of it. It was one contract on the ES. I told you in advance what I would try to do. I was not really very comfortable with it. The trade at one point was out of the money, 212 and 50 pennies. And I ended up closing it with about $100 of profit. I think I'm going to go check that out in just a second here. But right now, I want to just focus in on what exactly is going on here. We're struggle busting our way up, trying to get our head above water to breathe, but it's overcooked, man. This market is overcooked. So now we've got a good moment in time to really figure out from the room, from the group, from everyone in total, why don't everyone let me know, for the trades that you may be taking, long, short, or flat, long, short, or flat. Let me know with an L for long, S for short, F for flat. I already think I know what the answer is going to be, but I do want to get that poll out, and then I want to give you that average response back to folks. What are you doing right now? What are you thinking in terms of trading direction on a day trading basis? Long, short, or flat? Feel free to throw it into the chat. And like I thought, the majority answer is flat. I want to see what the minority answer is. Is it long or is it short? It's more short than long, but look, 90%, 80 to 90% of the vote that's come out so far is as folks saying, no, I ain't trading this. And I don't blame you. Right? I'm here to find as many credible entries as possible that I think I can profit from and demonstrate the entry, set it up in advance, grade it for you, let you know whether it's a A grade trade, a C- grade trade, where is it on the spectrum, and then of course manage the risk accordingly. So right now, still got the NASDAQ trying, as you can see, it's on your screen right now. NASDAQ is trying to push right back up to the negative divergences. There can be a little scalp breakout trade above 27,920. 975 is the next location. It's a volume point of control level. Oh, will I do it on the NQ? Is it too whippy? Well, I think I've got the MNQ in here, so I might actually try that, pull back slightly and go. I'm trying it on the MNQ. So I'm doing it on a micro over here. So not too much damage could be done, really. But still, a trade is a trade, and I want it to be profit positive. And there we go. Can we get a little bit more out of this? And it doesn't look like it's too happy, but I'm getting out of the way. Lost $20 on the trade, right? The very simple insight over here is, okay, it's not willing to be let go of. It's overcooked. It's overcooked, but it's not willing to be let go of yet. And if you look at the very left-hand side of your screen, the 1 hour chart, look, it's in a buy signal state as of 6 a.m. Eastern time. From the triple S indicator, the up triangle is there. We've got room on the hourly chart for the soldiers, the triple S line, to get up to the top of the downward sloping channel. When we look at the slope of the blue line, it is sloping up. So this is all supportive for higher. Now, I think my intent was correct. My execution was poor on that last trade. I got out of the way. It's still struggling to try and continue higher. It probably will make it like a magnet up to the 975 area. And what you can see here, this red line poking out on the left-hand side of your screen over there, that's the champion trend sell zone trail line. It's at 970, very close to that volume point of control going back a couple of days in action that I showed you in the intelligence briefing and the pre-market briefing. So we're probably going to hit that number. And now I'm starting to question myself and go, is it that overcooked? Is it, too extended to continue? Did I read it wrong? And my answer is no, it is overcooked, but we know overbought can get overboughter. Okay. We just have to be very careful with that. At this stage, the ES is sitting at 74.20. I'm not in a trade. I am kicking myself a little bit at this moment because I'm going, okay, we saw the acceleration on the NQ. The ES is more stable. It's not as overcooked as the NQ. You're seeing the triple S line valued at around 61.5. On the ES, it's not that that stretched. It's sitting up in the 57-ish area. So the ES has got a few more fumes to sniff to get high, if you will. The NQ has already been operating off of fumes for quite some time now, but it's still getting what it needs apparently. So we poked our hairs above the champion trend sell zone trail line on the 1 hour chart. This is now going to force me to look at the 4 hour chart to see if there's structures of resistance above price. And lo and behold, there are. The bottom of the MSR channel at 28,000, pretty much flat. 28,000 flat is the next challenge line. If we get above there, I can try a long above 28,000, and I feel like it's going to be a chase. I feel like I'm going to be taking it in a way that will probably not benefit me, but I can still do it. I'm going to try it. So I'm in. Okay. If it wants to keep going, I'm going to try it, but I don't have a lot of, let's say, technical faith in how long it lasts. It's already out of the money slightly. Let's see if we can get a little profit positivity out of this one. I'm going to give it a moment. There we go. A little bit. It's just not worthwhile though. Okay, fine. I'm going to take my profit so that at least I can bank a W rather than an L. So there's one. And you can see I'm skittish about holding it. Even if it's a micro, it doesn't matter. It's a trade, right? It's a trade. And I'm a little skittish about holding on at these expensive highs, but I can't deny the fact that we've gotten above structures. The room that we've opened up now is from 28,000 up to 28,165. Now, remember the one number that I kept quoting to you over and over and over again, the center of the long-term channel for the NQ is sitting at 28,165. We're in an uptrend. We've broken resistance. We're operating on fumes. None of that's changed. Should I use this to trade the ES rather than the NQ? That's where I'm leaning, but I'm going to try it on the NQ again. If we get a continuation here, I'm trying another entry here. If we start reversing on this bar aggressively, we'll probably come back down to the fast speed line, but we're coming up, which is good. Let's see if we can continue higher, and I'll take my trade after the 10 seconds is up. Let me just make sure I've got that position timer on screen here for you as well. Okay, there we go. So I'm trading an FFF account. The rule is, you need to be in the position for 10 seconds for, I think, over 50% of your trades. And there it is. So right now I'm just waiting patiently to see how this resolves. Did anyone else try and attempt the longs? Let me know. Did anyone else attempt the longs? Yeah, you saw me flip the script. You saw me take advantage of the upside. It wasn't perfect the whole way, but ended up profit positive. And I'm already doing fairly well on the day because we had a lot of good behavior in the pre-market already. So a lot of good behavior in the pre-market has already taken place. And that allowed me to actually, lock in some fairly decent gains on the day so far, which I'm happy to share with you in just a moment. So let's just see if this thing wants to continue up. Where's it going to? 28,165 if it wants to make a direct move there. If it wants to make a direct move there, that's where it's going. Now, that's, again, an expensive area. But look, I'm not going to argue with it if it wants to go there. Give me just a second over here so I can get my daily P&L up on the screen here for you. Yeah, I think I've got it set up to be able to put it up on screen. Okay, so here we go. I'll bring that up on screen for you right now as this market is trying to continue. So I'm trading a variety of accounts, as you can tell. My FFF accounts are down over here, and they're all the three that I've been trading are profit positive. And then there's a few others over here. And then we've got a, $1,371 gain on the day so far. So I'm going to continue trying to build on that, but I want to do it responsibly. And this is a hard, it's a hard area to want to just stay long, but I might just do it. I'm waiting. So it looks like a few folks took the long, which is amazing. And Mark S., you're saying it'll go over 28,115 to kill the shorts after it'll turn. You might be bang on. Let's see. Right now I can't argue with that. It is trying to continue. We are effectively trying to push up to make a higher high. The triple S indicator on the 1 minute chart is off the chart, right? On the 5 minute chart, it's off the geography of the overall channel range. So the soldiers are very far away, doing an extra job for their kingdom in terms of conquering land. And again, I am kicking myself that I'm not in a trade here, but the NQ wants to keep pulling up. The ES is getting a little more realistic with gravity actually being a thing. And MSFT was the call, right, Tim P? Right? MSFT was a call. What's it up at this moment in time? I haven't even checked it. I saw 8-9% last night. I just want to check it right now. It's up 15.5%. So you heard it on Monday. You saw it in market yesterday. It's helping the market get pulled back up as we speak right now. Okay, hard part now is to decide whether or not I want to get in on a back test of rising support on a 1 minute chart. Do I wait for a pullback to the rising support on a 5 minute chart? Will it happen? That's all the way down here at 28,000, around 11 points. May happen. Closer to 28,000, there's support of the 4-hour charts MSR channel, bottom. Let's go see if the daily chart's involved with support resistance in this mess of a market. It all comes down to 28,000. 27,990 is support of the slow speed line on the daily chart. So now as we're trying to come up, I'm going to take another attempt. I'm taking another stab. Now, we did get a breakout forecaster on the last close 5 minute bar, a 1 minute bar. Okay, so I'm in the position. You can see the position timer up top here. It's working. It's working. It's working. Let's get past that 10 seconds. And thank you very much. I'll take my $80 of profit. All right, there you go. Did anyone get that last trade? Did anyone get that last trade? Let me know. Now, again, I'm not expecting everyone to do it. And Mark S., we're coming to your 28,115. Let's see how it behaves around there. Now, it's pretty much exactly bullseyeing around there and pausing. It is a resistive structure potentially from one of the time frames. The daily, no. 4-hour, we're in a zone which we can traverse up to 165, which is where I think that we're probably going to head if this doesn't quit. It's about 165, 28,165. Bart, kudos to you. Kudos to you. Fuad, I fully agree. It is not just overbought. It is not just overbought. It is overbought, which is, we're aware, right? We're so aware. And exactly, Gus, right? Every piece counts as long as you can keep it. We have to know what we're trying to go after, how, what kind of risk we're dealing with a very overcooked condition, right? And Mark S., look at your call. Okay, as far as NASDAQ range movement, your 115 call, well done, my friend, well done. We came up to like 125, but in NASDAQ terms, 10 points is a blip. And it pulled right back. The shorts got squeezed, which is what is happening, right? Shorts got squeezed. I came into the room and I said, look, I don't think that we're going to have more than 1% up beyond what we saw in the overnight session, right? A 3.5% day on the NASDAQ, where the majority of it's already happened in the pre-market. In order to keep that up in the air or even ask for more, well, what we need effectively is another catalyst. So as Tim P pointed out in the chat, Microsoft's still rising, right? It's up 15.5%, a very big difference in behavior than what we saw from Tesla and Alphabet, right? And what you heard like into the end of last week, what you heard at the beginning of this week, what you heard in my strategy videos for ATR members, is, hey, look, Microsoft's probably going to pick the ball back up and show us that the allocation decisions that they're making with capital may be a little bit better. Now, I have not parsed through every part of their earnings release, so I'm not going to sit back and say I'm fully knowledgeable on it, but it did move up as we had expected, and it is carrying the ride. And Simon, I love your comment. Ride the momentum wave and then jump off the ride. Right? You're on the roller coaster. We're here for a good time, not a long time. We're here for a good time, not a long time. That's the idea. So I agree with that. Now, we are consolidating. This is a bull flag. We have an absence of breakout forecasters on that 1 minute chart. I'm going to make this full screen. I want you to focus in on a very key insight that comes with your Wealth Charts membership, the Champion Trend Pack Toolkit. right? We are in a champion trend pack buy sequence. It has 3 stages. The third stage involves these breakout forecasters. When we have an absence of 2 or 3 bars of no breakout forecasters, which we do on this 1-minute chart, and in a buy sequence, if we've got an absence of 2 or 3 bars with no breakout forecaster and a bearish speed line cross, which is what we have, the fast speed line, the blue one is coming down below the magenta. What typically it means is that the buy sequence is done. It's finished. And there's a predictable outcome on the back end of that. The predictable outcome is we come back and test the last, the second, the third, the fourth last breakout forecaster. So coming back down to sub 28,000, 27,980s would be the base case expectation. If it does not want to do that and continue higher, we will likely make the move all the way up to the center of that October 2022 channel residing at 28,165. I'm amenable to trying that long side trade, but I want you to know that the risks have gone up much further than any of the trades we've taken on the long side so far. And what you've seen me do so far on the day is do shorts and longs, right? So now if I want to go long again, I actually have a door that needs to open. You can see it on the 1-minute chart. It's one of the Wealth Charts tools. It's called the Momentum Shift 2.0. It's that red ball and white line. Okay, it resides at the high, 28,125. If we breach it, it effectively can act like a buy signal, if you will. In a very extended condition, in a market that should be pulling back down to about 27,980. But if it wants to do it, my finger's on the trigger, button's depressed. I haven't unclenched it. If we get a poke above there, we could start ripping. Poke. I'm in the trade exactly like I said I would be. Risk management is key. Fingers on the trigger to get out. Don't want to be in this trade for long, for a good time. And I've taken my good time. Okay, I got a cup of coffee out of that trade. Great. Okay, there it is. Now, again, very tight risk management required here. If one is in the trade still right now, the risk has to be limited down to the slow speed line here. That's the max. If we come down and perforate that slow speed line at 28,095, this thing will come down and start making its move down to the breakout forecasters, which is the predictable outcome. But in this case, it looks like the fumes are staying, keeping the market high. And Tim P, you keep your eye on MSFT for me. If it goes above the 16% marker, let me know. I think I'm seeing it, under 15% right now gain on the day, but oh my goodness, 15% gain on one of the world's biggest stocks. Obviously, it's a big part of the move. And Fuad, good move, right? The idea is if you're going to do it responsibly at these highs, right? I want to take the short, to be quite frank. And I'm going to try it with 2 micros below 80, 28,080, looking for a back test of the breakout forecasters, which is a predictable outcome. Now, do I know it will happen? No. You can look at me and go, why would you want to short this? The Champion Trend Pack Toolkit has a sequence. There's predictable elements on all parts of the sequence, including the end of the sequence. The end of the sequence, as I described, is an absence of 2 to 3 bars with no breakout forecasters. 1, 2, 3. Bearish speed line cross lasted for half a bar. So I do need to see more progress to the downside. I do have a negative divergence, which is this red line here from the high right there at 951 to the high right here. And of course, we are coming into the end of the hour. So want to be careful. Otherwise, George is going to scold me. I already have my hands full with the moody teenager, George. That's for sure. But she seems okay. She seems okay. At some point, I'll bring her up on camera so you can see what I'm dealing with. But hey, when I'm asked for help, usually if I have the ability to, I will help. So I'm helping to babysit today. Okay, here we go. I'm seeing a little bit of weakening. I would like to see the triple S line come down into the channel. The soldiers actually come back into known geography, mapped territory at a bare minimum. And I don't think we're going to see that until we're about below 28,080 to 70-ish, somewhere in that area. So you might be hearing some cooing and cawing from her right now. And look, if the long wants to continue, you heard it already from me. We're trying to come up to the barrier of all barriers for this market. That barrier is 28,165. And if we punch through here, we're coming up to 165. We are. I'm not taking this trade. It might be a great one. Okay, what I can say is you can try it. Coco. Shh. Coco. Okay, come. All right. So that's the moody teenager that I'm dealing with. Okay. She just needs constant attention in her in dog years. How old is she? She's 15 almost in human years. So she's up there. Great grandma type of age, I'm guessing. Yeah, she's a cutie, but she's moody. Oh, my goodness. She's quiet now because she's getting love, of course. 28,150. I was never a dog person. I was never really a pet pet owner. I tried it when I was younger, and I was gifted turtles, and I forgot about them for a few days, and unfortunately they expired. I was in single digits in age, so I'm not gonna beat myself up too much about that. But my mom was sure upset at me. It's like, how are you gonna take care of your brother if you can't take care of this? Okay, let's see where we're going. Okay, so one of the things that I can add into the mix over here is where the S&P E-minis are. Okay, we're well above the central line for the S&P E-minis. We're at 74.40 effectively. Now, one of the things that I do each week as well for folks in the active trader room is I prepare this sheet. It's called a key decision level sheet. And effectively, it's got the highest probability markers, levels on it. I'm going to bring that up on the screen briefly right now and just share that in a second. But I want to also, okay, there it is. 165 has been hit. This is the barrier of all barriers. I need to see how it acts over here. I'm not going to really guess at it, but we've made it to that barrier. We've made it to the center of the channel, center of the 4-hour charts MSR channel. We've made it up to the center of the October 2022 channel, right in the center there. That's the 28,165 line. You heard me provide you the insight in advance. Look, if it wants to continue getting high on fumes, that's where it can go. Mark S had that great call for that first stall out at around 28,115. And then we saw it break through resistive structures. It bucked the typical outcome that happens with the champion trend pack on stage 3. Look, it is a 1-minute chart, which is flimsy. The 5-minute chart's still in stage 3 of the sequence. You can see the breakout forecasters. We haven't had an absence. So it's still in a buy sequence. And this is a very challenging area for the market to break through. But if it wants to continue, I may want to join the move and play for more because it's opening up the upper half of the channel. But this is a lot to ask of this market. This is harder. Now, folks, if you're long, let me know. If you're holding on to longs and managing them, type in the letter L in the chat. If you're flat at this stage, let me know by typing the letter F in the chat. And if you've already started to short this bad boy, you feel free to let me know by putting in a letter S in the chat. And what I'll do is if I get enough responses back, I'll, of course, give you what that average sentiment is from the group. And Tim P, you might be right about that. Right? This does look very short squeezy. One of the things I wanted to do is bring up that key decision level sheet because it's going to be a great guide for me from here. Okay, you can see the ES where it's located right now, 74.37. So where does that reside on this sheet? 74.37 is still in our submerged zone. The way this tool works is home is line in the sand. That's your home. 74.75 is home. When you get down to 74.68, you're on the highway to get to the dock where your boat and scuba gear is. 74.56, off ramp to the dock. 74.43, you're parked at the docks. 35, you've got your scuba gear on. Below 21, you're going diving for all of this gold, well, some or all or more of this golden magenta treasure under the sea. And it's the other way around on the upside. You get past your line in the sand. You end up going to the highway to the airport at 88. You get off ramp at 75.08. You're parked at the airport at 75.21. You're in your seat seatbelt buckled, trade table stowed, seat back upright at 75.32, and you go wheels up at 45. So right now, we are at 37. We are in our submerge zone, but we've come from underneath. We've effectively gathered some treasure, and we're putting it back on the boat. Now, are we going to make the trip back to home? We'd have to be above 43 and really above 56, 74, 56 to tell us that we're actually starting to drive back towards home. We don't know that yet. 74, 56 would be the number. We're not that far away from it, 15, 16 points. Okay. And it's not giving up. That's for sure. So as of right now, I'm not going to fight it. I am going to mention to you that on a 1 minute chart, you're seeing these red lines. They're negative divergences, but heck, we've broken through a bunch of them already. We're still in stage 3 of the buy sequence on a 5 minute chart. At some point over here, gravity will set in, right? We've crossed the hour. We had a big up bar. We've crossed the hourly bar. The 4 hour bar is also closed. Okay, here we go. I think I'm going to try shorting imminently. I want to see something below the fast speed line. And I want to also look through the chat here and let you folks know what kind of responses I got. Majority response is flat. Majority response is flat. It's over 85% of the vote. The rest is mixed fairly evenly between long and short. I'm trying a high risk short trade right now. This is a C- grade trade. I'm relying on the idea that gravity actually does exist here. I've decided to take it with 2 micros, and it could very easily go wrong on me. My risk is going to be capped, above 58, 57, somewhere in that area. That's where the speed lines are. The fast speed line is. Okay, there you go. Little profit positivity. You know what? I'm taking some profit. Why not? This is a very high risk trade. I'm going to do it again, potentially. But if I want to do it again, really, I want to do it. I don't want to do it on the ES. I want to do it on the NQ. It's more overcooked. This could be the beginning of a pullback to, get into a consolidation zone. And it looks like I shoulda, woulda, coulda stayed. Doesn't matter. No, where's my next entry? That's what matters. Below the last breakout forecaster on the 5 minute chart, 28,093 points. That would be the area where I could consider taking a short from here. Could I short it down to there? Sure. I feel like that's too rushed for me, so I'm not going to do that. And again, this is a C- grade trade because all of the signals are set up for long. Still, they're just softening up, right? We're not in a sell signal on the 1 minute chart, but the triple S line has now come into the channel, into the uppermost quadrant, and the soldiers, the red line, are negotiating with the generals, the dashed white line, which is a fast momentum line. The soldiers move from quadrant 4 into quadrant 3. The instruction is the generals are sending the soldiers down to grab the king and the queen, which is the blue line, and bring them into the upper half of the channel, which would be effectively the king and the queen having a little victory tour, seeing the spoils of their victory. The soldiers have already conquered all of this land in the upper half of the channel, for their kingdom. It's done already. They did that and then some. So if the generals send them down to go grab the king and the queen and bring them up, I can take a short on the way down and then a long when I see that, reversal. So right now, I'm still not at the first line that I am considering short below. We're getting closer to it, closer and closer. We're about 10 points away from my line. Fingers on the trigger. Buttons depressed. Haven't unclenched it. 97, 98, 99, and no dice. Let's see if we get below 90, 93 effectively. And it'll be a very quick trade if I do decide to get into it. We're a few points away where I'm in. I'm taking it exactly where I said I would. That breakout forecaster. It's a very low grade trade. Okay, but it is a trade. I'm in it. It's profit positive. I'm 10 seconds through, and guess what? I'm banking my profit. Why? It's a crappy trade. It's high risk. Sure, there can be more, but I like taking pieces of the move along the ride. Now, what I hope that demonstrated at the end of the day is the ability to, Coco, just have a sit. The ability, it was getting too hot with her on my lap. The ability to play both directions are there, right? And Naveed, what are you saying? I'm just reading through your, hey, you know what, Naveed, what we do in the market morning is we do a pre-market briefing, 9:15 to 9:30, then live fire from 9:30 to 11, and then 11 to 11:30, all the questions you want, please ask, and I'm going to answer. I'll try to, of course, answer questions along the ride too. Like for the position timer, that's easy. Just click on this button, top right-hand side of your screen, in your execution panel, right there, and out will come a little toggle menu, and you can toggle on the position timer. Huh? I'm right now trying to assess if we're going to have the next move down to the next breakout forecaster at 28,000, about 50 points. And as far as importing a layout, you need to save it as the default, right? I see your question over there, because I know that can be frustrating, right? You open up the hamburger menu, you go over to the layout menu, you can import the codes, you can go down to the premium layout section, you can scroll down to my name where the SSS stuff is, you can click on it, pull it up, and then you have to go and save your layout. And when you save your layout, you can save it and tick off the button that says save it as default, which means it will open up with that layout. Okay. Well, Gene, so my question back to you is, did you enjoy the market morning session at starting at 9:15 today? Because my answer to your question is tentative, but do you like what's happening? You let me know. Yeah, okay, it helped. All right, so that's good. Okay, what I'm waiting for right now is to figure out whether or not this little minor pullback is going to be met with actual buying now. Because it's quite clear on a 5-minute chart, you can see a perfect swing high pattern over 3 candles. It's a classic 3 candlestick swing high pattern. You have your up, you have your indecision, you have your red bar that at minimum has to close more than half of the body of the green bar. It did more than that. So we're in a confirmed swing high on a 5-minute chart. Now, what does that mean? That means that there is downside risk over here. Bullish moves up, if they're going to start, and they're going to start with force and be backed up, can't be based on squeezing anymore, short squeezing. They have to be based on actual buying at this stage. So that would require unison behavior between the ES and the NQ to the upside. They're in unison weakening right now, right? Those that played long on the short squeeze took profit. You saw me take a little short, right? Okay, and the answer there is no, Naveed. Now, I know that there's a lot of questions probably coming through the chat, and my apologies if I haven't kept up with them. But again, remember how we kind of work the morning, right? We got a lot of folks here that, I'm and a very diverse group that what I'm trying to do is cut to the chase of how do we get stuff done for the market morning in the context of what we've already presented, what I've already presented on what I think the week is likely going to play out like, right? And I'm never going to tell you that I'm going to be right all the time, but you'll see over time that the flight paths that I put out there, there's a plan A, there's a plan B. They're right a lot more frequently than not. If you've seen that for the folks that use this tool of mine, that literally is me drawing out where I think the market can go in 2 high probability ways. If you've seen this work out more often than not, let me know. Give me a lucky number 7 in the chat and share that with me, because we are on flight path B. There's not too many questions about that. Wow, lots of 7s are coming out through here. So that verifies for me that folks are aware, they're operating, they're using it, they're understanding that it's there. I'm not going to tell you that it's going to be right all the time. And right now, we've already we've come down. Are we on the move up? And are we about to come up towards the center of the weekly pivot range? Look, the NASDAQ's already had a big run, right? The ES has already had a big run as well. And, if we look at the ES on a daily chart, let me just pop that up. Right, we are on a SSS sell signal. We closed yesterday below the MSR channel, which is the 3 lines. MSR stands for moving support and resistance, and the double red dots are there. Even on the rebound back up, into the falling speed lines, you're seeing the double red dots from the Triple S tool. I did a class yesterday on the Triple S toolkit and strategies I use there, and in particular the PTC pattern, the pre-trade conditioning pattern. That's not what this is. This is just straight sell, right? But the double red dots are there telling you the sell is still in force. It's likely going to come back down again. If we start getting these blue dots underneath the bar rather than the red dots above the bar, then we know something's changing. And hey, thanks, Mike R, Bill, John, Tom F, to everyone that wrote in, Min, Daryl, Dave V, Donna. And Donna, I saw your comment yesterday, dear, in the chat. I wasn't able to bring it up. That was really sweet of you and really kind of you, and I appreciate it. I appreciate it to everyone, and I know Cool Dip, you put one in there as well. A whole bunch of folks did. So, thank you for that. I do appreciate that. And to everyone, kind of acknowledging this, amazing. Yeah, exactly. I know, Anthony, you're right. Last week, it was very hard. This is a market that is in a significant transition, right? So we have to have a plan to work against. Now, I'm just going to get this off screen, get back to the matter at hand here. Are we in a bull flag getting ready for the next leg up? I don't think so. I think the up is probably done. Does that mean I should be comfortable with shorts? Not yet. We're trying to come back up to the negative momentum shift right over there. That's the red ball, white line, where there's negative divergences as well. That's the high, right? We pretty much came up to the number that I quoted to you as the most important number on the day. If we're going to start another leg up, we've got to be above 165 at a minimum. And what Wealth Charts is doing for me here is it's telling me that I've got barriers. It's not just about the high. I've got a mathematical pattern that creates a whack-a-mole, a little hammer down right at the high. That's that red ball and white line. There's another one slightly below it. So am I going to mess around with longs between here and here? Look, that's 70 points. With micros, I could scalp. The earliest I could do it is above the speed lines on the 5-minute chart. But look, the fast speed line's below the slow. I don't want to mess around with that. It could work out. And of course, taking a breakout trade at highs without having a proper, real pullback of in this market, like a percent, and then moving back up, that's also going to be hard. It's not going to be easy either way. No one said it would be. So it's about, am I comfortable at this stage trying to jump in and ride a move from maybe 130 up to 180? I'm going to go down to 1 micro. I'm not going to do it on the ES. And I'm going to do it right there on the NQ. Or that's the MNQ, sorry. That's the micro. The ES is at 37. Remember, we're still in our submerged zone, 74.37. So far, this trade's a nothing burger. I wasn't expecting a whole bunch out of it, but I don't want it to go bad enough on me that it starts eating into anything significant. And I don't like what I'm seeing, but it held the fast speed line. We've got Rob's IRBs here as well, but it's not going anywhere. I'm out. $16 loss on that. I lost my patience for this. It's not a great trade to begin with, but it's probably viable. I'm not going to re-enter that trade. The Triple S line didn't come back up through the fast momentum line on the 1-minute chart, not yet. It's very extended on the 5-minute chart above the top of the channel. It's through the center on the 4-hour chart, sure, but the 4-hour slow momentum line still pointed down. And on the hourly chart, it is in a buy signal state from earlier, right? And the Triple S line is at the top of the channel there. This market's cooked. The short squeeze is done. Now, are we actually going to get, the bear claws coming out of the woodwork and breaking things down? That's a different story. Let's see. I don't know. And Sleepy Trader, hey, I think your numbers are good. Here's my numbers. We're in my submerged zone between 43 and 21. I don't really want to spend any time going long. We're at 28 right now. If we come down and breach 21, we're diving for treasure again, right? The same tool that I brought up a little earlier here. So I don't know that yet, but we're at 28.29 right now on the ES. Now we're at 31. And look, this might be the story for a good chunk of the rest of the hour. Mark S., you're reading my mind. I see that you put it at the same time. I was thinking, look, we might end up being in a choppy sideways malaise for maybe dozen or a couple dozen minutes even. We already have been for a dozen. And Fuad, great point. Fuad, is it okay if I just read that out? Because that's live logic from a trader. Okay, so Fuad wrote to me, tempted to go short now. It's counter trend, or should I stay picking up, picking tops? And then he writes, nope, flat, right? So I agree with that, right? It's that you're parsing through what's the opportunity. Like the one thing that I think I can do to help traders at this stage is, if you're frothing at the mouth, chomping at the bit, lower the intensity down. We've paused. Short squeeze is over. Jimmy, you're right. Now slightly lower high on the 1 minute chart right there. Yeah, I agree. It's not official until we come down and actually make a lower low. Then we can call that truly a lower high, right? We need to come down and break below 28,065. But I guess the best thing that I can do in the role that I'm playing here is, beyond trying to find great executions, grade them, let you know what the risk is, take the ones I'm comfortable with. Beyond doing that and putting it into the context of where the market's going, the psychological part right now is, I think the important part is, hey, look, just like Simon G said earlier, right? Simon was like, ride the momentum and then get off the ride. Okay. My expectations, the majority of folks that are trading right now are flat. In fact, let me know. Long, short, or flat. I'm flat, obviously, in my day trading. Yeah, this is what I'm seeing from folks now. That's exactly what I'm seeing. I'm seeing folks let me know they're flat, which is amazing. Now, there's a cost to that, right? If a big move happens, you go, oh, I knew I should have, or I wish I was, or none of that matters. Okay. The opportunity to play it up to 180 is there, right? I may decide to try it again. I know it's not a great trade. We did pull back. We are setting up again. It is pushing up now. We're almost at the 180 marker. And the hard part now is, like, there's effectively two trades that I spec'd out. One back up to 180, one above 180. Neither are going to be incredible opportunities. Both can be potentially attempted, but neither are going to be great opportunities. So the majority of the response that I'm getting back from folks is that they're saying they're flat. And Joseph M., I hear you. Solid, I agree. Uptrend is there. But think about the logic and the stats, okay? Most of the move has happened in the pre-market, correct? Most of the move, so there's your daily chart, most of the move happened in the pre-market. We were up 2.25% in the pre-market. These are your daily bars, right? You go back in time and you take a look at, what does it require? What does it require? From the close, 2.25% was what we were at when we, at jump, right? Right at the open. That's where we were. Okay. And what have we done since then? We've moved up 1%. What I did between 9:15 and 9:30 was I set up the argument that at most we are likely to see another percent and come up to a barrier that's on that long-term chart. 28,165 was the number I quoted, and that's about 1%. About 290, 300 points is what I quoted during the pre-market briefing. It's happened. And then my statement on the heels of that was, hey, if we're going to get more than that, we need an incremental positive catalyst, right? An incremental positive catalyst. So do we have one? I don't think we have anything new coming out right now. So I'm not seeing it in cross-asset behavior. And Peter L., the two flat lines above the action that you were looking at are called momentum shift 2.0s. And when you got a red ball, white line, it's a negative momentum shift. Let me just dock this back. That's the hourly chart. Okay, we're coming up to it now, right? We're coming up to the first one. It's at what, 75, 76, 176. The other one's at the highs. And if we breach it, it is a valid buy trigger. How long is it going to run? I don't know, but I am going to take it. Not the first one, the second one. So remember, there's two trades I crafted out. One is back up to the negative momentum shifts. One is above the negative momentum shifts. And I'm not hoping for one thing or the other. I'm just going to take advantage of it. Well, two presented min because of the math. The math worked right on the 10:02 a.m. bar to give us that red ball and white line. And Peter L., that's a negative moment. That's a momentum shift 2.0. It's a negative one because it's red ball, white line. So it can work as a whack-a-mole, right? And then the math worked again right after, right? The algorithms are constantly scanning price behavior in action to see what fits the model, what fits the bill to produce the indication. And that's why on wealth charts, what you're going to see is the indications will present intra-bar. They'll flash on, they'll flash off. If at the end of the bar they remain, it's a signal. While it's presenting, flashing on, flashing off during the bar, the math's in progress. It's a tentative signal at best. But hey, look, we've come up and we are now still challenging it. Indecision is presenting. There's some compression in the speed lines, the blue and the cyan and magenta. There's a little less air in between the two. But the 5-minute chart, like Joseph M was saying, solid, right? It's an uptrend, and this could be a resumption. Look, we've seen the market run on fumes much longer than one would expect. So my mind has to be open. I can't be biased. I have to be open-minded to know that, sure, could today turn into a 4% day before the market, before we even get to midday? It could. It typically doesn't happen. That's the point that I was getting to, Joseph. It typically doesn't happen, right? Typically, you'd need a new wholesale catalyst, right? And the next catalyst is after the bell. It's Apple and Amazon. And Jeff, I think that's Jeff L. Yeah, you spot on your comment. Spot on, right? Apple and Amazon, they're the next catalysts. And we may very well be, in a choppy range-bound market waiting, right? Waiting. Now, notice, whack-a-mole, okay? I'm going to beef up my basket here. I'd rather play with bigger size short based on the fact that we are rising on fumes and coming up to a resistance structure and haven't broken out. But at the same time, I'm willing to also do a 2 or 3 contract long above 85 roughly. Probably a 2. Let's see. Now, I want to keep the gains that I've had on the day. I've already shown you a 4-digit gain on the day. So I want to keep and build on that. But again, I am here to trade. So I am going to take advantage of it as long as I'm comfortable with the risk. And basically what I'm saying is I'd rather use more size on the short side than on the long side. That's it. The trading, the idea for the trade is the same on the long side. And there it is. It poked above. I'm in. I'm late. I'm very late. I feel like I'm chasing it by getting in at that place. And I probably will suffer from that. But I am going to keep it in force for now, temporarily. You can see my fingers on the flatten button. The button's actually depressed and I'm waiting. There we go. Okay. Thank you. Thanks. $50 a profit. Just another little piece, just adding to the pile, adding to the pile, adding to the pile. Those that took it, those that are in it, is it still valid to hold on to? Answer is yeah. Question now is, where are we going? Okay. If this is now opening up a new vista for long side trading on fumes after a very minor pullback, are we actually seeing some buying follow up? We are. This is not short squeeze as much as buying. It took a squeeze break to break us out there, but there's some buying that's actually happening here. We're at 74.44 on the ES, and 74.44 on the ES puts us where? 74.44 puts us out of the top lip of our submerged zone. 56 is where we get on the highway to head back home. 74.75. We're at 45 right now. We're at 74.45. Okay. So what I want to establish is where we're headed right now. On the ES, it's up to 56. There's about a 10 dozen points or so of potential upside that's opened up for the next trading range higher. We need to stay above 42, 43 for that range to be valid. The specific insight on the ES, the longest from 42 roughly up to 56. On the NQ, what are the target areas? So up to the 4-hour chart, we are headed up potentially to 28,340. 28,340. We've made it through the center of that long-term channel, right? That was in the rearview mirror, 28,165. Okay, so we're well above that right now by about 60 points or so, which is statistically significant, making this range valid up to 28,340. I want to go flip to the daily chart and see if there's any other structures that I have to be aware of. There is one. It's 50 points higher. It's the bottom of the champion cross sell zone. See that red opaque zone over here? That's the champion cross zone. The bottom of the zone can act like a barrier of resistance. It's sitting at 275. So 225 to 275 on the NQ, above 275, 340. And you let me know if you need me to repeat any of that stuff, and it's my pleasure to repeat it. Angel, it was a decent trade, wasn't it? Right? So there were two trades, right? I took the latter of the two, and I'm not enthused about either one of them, right? I think we're a little extended, but I'm working with what I've got here, right? And Fuad, I'm glad that the sizing up, sizing down comment, struck a chord. And Chandra, to repeat, if we're going higher on the NQ, we need to stay above effectively 200, and there's a trade up to 275. There's a barrier at 275. Above 275, we're headed up to 340. Okay, so that's the range on the NQ. So happy to repeat it again if you need, folks. And you just ask me in the chat, and it'll be my pleasure too. And for ES traders, I don't want to leave you behind in any way, shape, or form. I've already commented on what the range is there. And look, we're at 37 right now. It's not a valid long side moment, right? We're back into the trap of our submerged zone. Above 43, 42, 43, 44, we've got a move up to 56. Okay. Otherwise, being below 43, we can come all the way back down to 21. I think Sleepy Trader put that in a little earlier, right? So Sleepy Trader, where are you at now? Are you back in the saddle, trading a direction? And Harsh, you might be right? This might be chop, and it might be chop and then dump. Flat. Okay, I hear you. I hear you, Sleepy Trader. That makes sense. Okay, now if we get back up above 43, I can consider a long. Okay, and the way to use multi-time frame is just go backwards in time from the now. Is there resistance up here besides the highs? No. Is there resistance over here on the 5-minute? No. Okay, then from the 5-minute, I don't use any. I use the daily, 4-hour, 1 hour, 5-minute, and 1 minute. Of course, I look at weeklies and monthlies too, but it's not as relevant for this type of environment. So I'm going to go up to the 1 hour chart. Do I have resistance above me? No. Okay, I'm going to go up to the 4-hour chart. Do I have resistance above me? Yes. Center of the MSR channel, 74.50. So I've said to you on the ES, if I want to take a long on here, it'll be above 74.43, 44, somewhere in that area, and I want to trade it up to 56. But I have to be mindful that at 50, there is a barrier constructed. Technically, it's the moving support and resistance channel center. Okay. I'm not in any trade right now because I'm not seeing any reason to be at this very moment. If the NASDAQ gets a little perkier here, it's headed up to 275. And I could take on a long because it's not quit. It certainly has not quit. That's for sure. And I'm very close to considering another entry on the NQ to try and capture maybe 25 points. It's trading trading on fumes at the end of the day. So one wants to keep their risk management tight. Now, when I demonstrate entries, again, for those joining today and listening in, I've been listening in regularly, you don't see me use limit orders. You don't see me use stops. That doesn't mean you shouldn't. Right? Again, my sole goal is to make sure that we're making high probability decisions on setups that I can identify, that can be validated technically, and I might not take them all. So I tend to enter in, well, I do enter in with market orders because we're dealing with something very liquid, and then I manually exit with a market order as well, right? Wealth Charts makes it very easy for you to put a stop in, put a trailing stop in, right? We can do a lesson on that if you need a little later in the session, and I can do some examples. But I'm not endorsing a style of risk management. Everyone has to get comfortable with their style of risk management. I'm coming to the table trying to provide as many credible, high probability moments where I'm comfortable taking a trade, executing, and then you'll see me lock in, lock in, lock in. So I'm waiting, Mark S., to try to take that long, actually, and I'm also waiting to take a short. So I'm waiting on both ends. Right now, I'm seeing the impulse to buy start to wax and wane away with the fast spike on the Spike 2.0 tool, which is the second subchart here. It's coming down to the ground. It actually can promote a short, but it's premature for right now. Like, this could be the top. Okay, we're not going to know without hindsight, but my tools are not all in the spot that give me permission to do it. The triple S line is starting to breach the fast momentum line. Soldiers are coming down from quad 4 to quad 3, breaking through or breaching through the fast momentum line. Then comes the center of the channel. If we come down below the center of the channel, I have it's a little bit more legitimate to take the short there, but I have to also look at the backdrop. The backdrop's still super positive, right? So if I'm shorting and trying to catch a top over here, we know that top catchers and bottom catchers on average don't do great. Okay, results are hard. It's hard to be consistent and get them right each time. So I might end up taking a pass and just waiting. But I do love to trade, and I will take a risk if I'm comfortable with it. I'm not comfortable with anything right now. I'm not doing anything. How's it going on your side? Let's just do a poll of the room. So we came to the table. You heard me come out and say, hey, I don't think we're going to get much more than another % on the day. Okay, we've gotten 1% and a little bit. We've seen it driven by Microsoft, short squeeze, reallocations of positions have happened. Okay, all of that's done. Geopolitics lessened. All of that's happened. Do we have the market catalyst to add another 0.5%, add another % to the day on top of what we've already seen? I don't think so. I don't have the evidence that proves that that would be the case. Right now, we're in a day. You can see the open, high, low, close, and percentage change up there. We're already up 3.6%. We're about roughly 1/4 to 1/3 of a % more in terms of gain than I'd expected on the day. Right? I expected us to probably stall out at the 28,165 area. Well, obviously we're above there, right? We're at 235. We're about 60, 70 points, 80 points above my number. Now, I go back in time, and I love, I love collecting stats and understanding behavior of the market. And what I know is that we don't have the goods really to sustain another 0.5%, let alone 1%. I don't really think we have the goods to sustain 1%, let alone 0.5%. That's the way it should be said. But am I going to argue with it? No. If we poke up here and I see my triple S line get into the uppermost quadrant, I am tempted to take on a long, I must say. But P&L management should always factor in, right? Should always factor in. Look, I'm up now $1,500, $1,500 and a couple of bucks on the day. You're trading very small size, locking in, considerably. Donna, good for you. Good for you. And it's just as important to know when to quit. Like Sleepy Trader was telling me in the chat, I'm done, done for the day, right? It's just as important to know when to quit. So there you go. Now the question mark that I have is whether or not we are setting up for another directional move that can have some substance, some range. Are we coming back to back test the 165-ish area, i.e. here? Obviously, in absence of breakout forecasters as presented on both the 5-minute and 1-minute chart, the resumption has not been epic. Got a trade out of it, but it is starting to weaken. And the question now is, where are we going? Is it chop city into the end of the hour? So here's another, a couple of considerations. Well, at least one other consideration. So a consideration is volume's going to come off the tape at 11 a.m., at 10:59 a.m., right? It's going to be volume from the Eurozone. It's going to be volume from certain dedicated strategies as well. It's going to come off the tape. How is that volume most likely positioned in the market? Net long or short? Long. We're talking about short-term volume, day trading volume that comes off the tape. So if the market is net long, skewed to long, okay, and that volume has to come off the tape, and if we don't see the market rising into the end of the hour here, or even over the next 10, 12 minutes, well, guess what they're going to do? They're going to start closing their longs, and mechanically the market will be pushed down. So that's not it's not a genius insight. That's just part of market mechanics. The same way that at 3:50 p.m. Eastern time each day, you get MOCs, markets on close. The imbalances between dealers and funds and houses and shops that are making trading decisions during the day. And if the imbalances to the sell side, it's reported at 3:50, and then the market trades on that. If you're new to trading and you've noticed, jumps or dips at 3:50, that's the reason why. Into the end, it's a similar kind of mechanical thing into the end of the hour, into the end of the 10 a.m. Eastern time hour that I'm just trying to communicate here. So if the market holds up and still grinding up, it could continue up. Okay, but if we're not actually rising and we start eroding, well, he or she who sells first wins, right? So it's not typically a reversal, Donna. I'd say, there's a very discrete statistical window between about 10:47 a.m. Eastern time and 10:53 a.m. Eastern time, where we can gauge the direction of movement. And if the market's skewed net long, and if the movement during that 6-minute window is predominantly down, I'm expecting that net long position in the market to start unwinding into the end of the hour. But in that 6-minute window, if we're actually rising, I'm expecting they just keep milking the long until the end of the hour, until about 10:58, 10:59. And vice versa for short, or a market that's skewed to the short side. Okay, here we go. Fingers on the trigger, buttons depressed. I feel like I have to close my eyes, plug my nose to take this trade. Yeah, why do it? I haven't made a trade in a little bit here, so that's why I'm forcing myself into it. It is aligned with long side signals. The negative momentum shift's already been breached, so it's really just get above 45, get above 50, trade it up to 75. We've already done the work. We know that there's resistance at 75, 275. Remember, Chandra asked me to repeat it. The 75, and then there's 340. So the work's already done. The numbers are there. We know what to do. The ES is at 42, 43, 74, 42 at this moment. So it's trying to leave its submerged zone. Okay, now before we get any further into any trades over here, one of the things that I want to make sure that you hear beyond market insight in the next trade is, those that are joining us that are new, I want to make sure that you've got it really straight what role I'm here to play. I want to keep you stable. I want you to see things for what they are. I don't want you to have bullish or bearish goggles on. And then I want to find high probability setups and take as many as I can of them. And there may be one below 200 right now, down to 150. And I'm considering it. I need to see my indicator cross below the blue line here. And I can take a piece of that move reliably then. It would be more of a scalp trade. But again, the point that I was trying to make is, hey, if you're newer to the room and you're listening in, okay, here we go. So I got the breach, triangle's on temporarily. It's a C- grade trade. I'm forcing myself into doing something. Okay. I want to see that continued breach happen, and I'm going to take a little piece if I can, or I'm going to have it go wrong on me, but not let it go wrong to the point where it hurts or damages my P&L. I've decided to do it with just one micro here because it's just a testing little moment, and it can go very wrong very quick, right? There it is, there it is, there it is. Thank you very much, and thank you. Okay. Oh, that's a lunch at Mickey D's. There you go, and just add it in. And that's exactly right, Mark S. Right. So it's the infamous center of the linear regression channel going back to October of 2022. It sits at 28,165 with a 10-15 point radius around it. It's a very important barrier that we've poked above. We haven't closed above it, but we've poked back up above it. We've seen closes below it, right? And PTC set up on the ES, John. Bingo. Well, thank you, sir. I know you're looking at, you got my back all the time. Thank you, sir. So there you go. Down signal, up signal, 1, 2, 3, 4, 5 bars only, not 6 bars, not more than 6 bars. Down signal. What are we waiting for? 2 bars closing sequentially below the MSR channel. We've got one. This one's in motion. We can take the trade on the close of this bar if it closes lower, or we can wait for the double red dots to appear. Now, on top of technical pattern, so this is the PTC pattern that I taught about yesterday, the SSS students are well aware about. We have to also, you hear me always say, I want to layer common sense on top of everything else. Common sense says, if we're not rising between about 1047, this is the window, 1047 to 1053 a.m. Eastern time, the net long position of the market will probably come undone. So I've now had, we're not in that time window just yet. We're approaching it. So I want to be aware of that. And I also want to be aware of, even if I've got this high probability pattern on the 1 minute chart, which you can see, happens over and over and over again. It happened over here, okay? And it was longable right there, somewhere around, 9:19 a.m. End of the bar was at 74.08, and we got up to 74.16. That was an 8-point trade off the tool. Okay, over here, this is actually another pattern. I'm trying to bring the patterns in on the SSS tool one by one, but this is actually called a slingshot pattern. You don't want separation of more than 3 bars and only 2 signals. You want a dip below the MSR channel and a reversal right back up. So ideally, you want the dip on the down triangle to actually close below the MSR channel. No more than 3 bars of separation between that and the buy signal. And then you want the buy signal to be a candle that busts up above the MSR channel. It's just pull the slingshot back. So this is another one of those extraordinarily high probability patterns, but I have not introduced it formally and curated it in front of you. The PTC pattern is the highest of all. So this is an alternative, and it obviously worked very well. So right now, what John was informing me of, has it come to fruition? Not quite yet. We're getting closer and closer to it, but not quite yet. So I'm going to just stand pat. I know we're in the submerged zone. I know the bottom of the submerged zone sitting at 74.21. I know you're looking at that too, John G. But I appreciate you bringing it up, because that's just another piece of live proof that the tool is literally designed to have these high probability setups, and I just need to see it confirm it is not. And again, I know that we've got a backdrop of buy signals. I know that the market has not pulled back enough during this time window to tell me that it unwinds into the end of the hour. And I also know that I've got some gains on my P&L that I want to keep, right? Hey, my pleasure, Nathaniel. So folks, as we move into the last 10 minutes or so of this hour, there may be the opportunity, and there it is. There it is. There's your double red dots. The bar's not closed, but we've had 2 bars close sequentially lower. Double red dots are in play. I'm going to try it intra-bar. Okay, it's not a confirmed pattern yet, but I'm trying it intra-bar. Okay, so I want to see if I can get some more out of it. There it is. There it is. And thank you very much. 37.50. Is there more? Yeah. Below 21. 21 is the bottom of my submerged zone. So below 21, it can be started again. But there it is. John G, high five. So, folks, how did the morning go for you? I'm probably not going to take too many more trades here into the end of the hour. My question to you is twofold. How'd you do? Okay, number one. And did you get what you need from me? Number two. Hey, Stephen E., I'm super happy to hear that. Is it okay if I read that out to the room? Because there's going to be lots of other folks in your position as well that are very likely going to benefit from that. Perfect. Okay, so Stephen E. said yes. So Stephen E. says he doesn't prop trade, but he does trade UVXY weekly puts and call options, and using the guidance from the room over here and the tools, just another way to take profits out of the market. Right. So the approach that we want to take is macro down to micro, so it should be more holistic, and folks can craft opportunities, at will. And hey, every day has its own unique fingerprint, Gerardo, right? And there are definitely really good days. There are definitely really cruddy trading days, but there's always going to be risk and opportunity. It's just about, do you think about if it's day trading. Everyone has their favorite foods. Everyone has their favorite restaurants, their favorite meals. Think about setups as being a menu, right? And you need to be familiar with the dishes on the menu. You need to be familiar with a variety of setups, okay? And then you need to be able to, understand what's the chef's special today, all right? And is it one of those menu items that you like, or is it adjacent to it and you're able to execute? That PTC pattern is still working, right? Double red dots, double red dots, double red dots. We're still coming down, but we have not broken below 21. And we had your down, you had your up, okay? You have your down, and then you're looking for 2 bars closing sequentially lower below the channel. That was one. Nope. That happened. That was correct. But a blue dot appeared. I didn't take the trade. And then the double red dots appeared. I took it intra-bar. But I took it responsibly, knowing that I'm coming into local support at 21. Below 21, there's another trade now. Now, for those who want to execute on it, down you go. And exactly, it's all about the odds at the end of the day. John G., you're absolutely right. And what we're doing is we're trying to use pattern to find setups that have better odds. And when I say we're trying to use pattern, we're using the technical tools that, make the patterns very clear to understand. So this is in motion. It's happening. NASDAQ's coming down. And of course, in the role that I'm in, I'm always sitting back going, can I bring this up and do this one right now as well? What is that going to do to the room? How are folks going to perceive that, based on what's happened so far? So I'm not going to trade into the end of the hour here. I'm just going to simply communicate it. If the ES comes down below 21, there's probably another short. If the NQ, which has come down below 28,165, comes down below Mark S's original line, 28,115, could there be another short? Yeah, very likely. And where's that short coming down to? Well, down towards 28,000 and about 30 points, 50 points, right over here would be the idea. Just remember, you're in that time window now. It's almost expiring, and the majority of what we've seen during this time window is down. So the predictability of what happens with the volume that gets lopped off the tape at 11 a.m. is about downside into the end of the hour, okay? Now, it's not going to work all the time. But as soon as the clock strikes 10:53, I go back and I look at 10:47 to 10:53. What's the predominant direction during that time? Down. What's the market positioning into that time window? Net long. What's going to happen at 10:59? Volume's going to get lopped off. That's more biased to long or more situated long. So what should happen from 10:54 onwards or 10:53 onwards, like now, it should be more about down. So I want to keep my eye open for more shorting. And you'll note that the ES is working on the short side. The 21 marker broke. We're below it by several points. The PTC pattern is working yet again, down, up. Handful of bars of separation, no more than 6, down. 2 bars sequentially below. This one had a blue dot, so not wanting to take it there. Double red dots came in, good to go. If one shorted it at 24.5, I've already got a 6-point trade. I took a point or less than a point, maybe half a point out of it. I've decided not to jump back in again. But is the trade working? Is the pattern working? Are Triple S students happy? Let me know. Hey, Jeff, I'm super happy to hear that, my friend. That's amazing. That's amazing, Jeff. I'm super happy to hear that. Jeff's just letting me know he did well in the morning. That's Jeff S. Thank you. So yeah, almost a 10-point trade now for those that are in it. And the insight that I brought to you in advance is about, well, what happens based on the behavior during that window. So you've heard me say 1047, 1053, market's net long. If it's moving down during that window, the odds would support we move down into the end of the hour. And here it is. We're not at the end of the hour yet, but it's working. So it looks like folks have done fairly well. Let's do the roundup right now, a final roundup. I guess the best way to do this is give me a lucky number 7 in the chat if you were able to do well this morning. Against whatever goals you had, were you able to do well? Give me a lucky number 7 in the chat, and I'm just going to start, just watch. I want to see if folks were able to do it. Because for me, at the end of the day, this is the payoff, right? If you're able to do well, then what I'm toiling against, and, truth be told, look, markets were kind to me a long time ago. And one of the decisions I'd made a long time ago was to learn how to do it better and then to pay it forward. I've been doing that ever since, 2011, 2012, 2014. Been broadcasting since 2014. And I don't get it right all the time, that's for sure. But when you have great people around you that point things out and have your back, it really makes it a lot easier. So the trading range that I identified for those who wanted to play short, below that 115 marker, down to about 28,050 to 30. That's what's happening here. It's in play. Hey, Keme, just write into support at wealthcharts.com, okay? And they'll take care of you. It's nice to see you here. I know I haven't seen you in the room for a while. So it looks like folks did well. Like, I'm getting some detailed comments from folks on how they managed the morning, how they use the insight. That's amazing. And Tom A, lesson is profit, right? Exactly. And sometimes I get a lot of lessons in the market, a lot. Okay, so here we are now, moving down into the end of the hour as forecasted. We've hit that area. If it opens the door below here, we'll have a whoosh down quickly to the 1 hour charts, fast speed line, and then bounce likely. And we're getting very close to the end of the hour right now. For those of you that have been, in the room this morning and have been, that are brand new, for example, to the room, I'm really hopeful that things have worked out well for you. That the information is digestible, and that PTC pattern, boy, it shocks me, John G. It shocks me every time. Even at this point, we got that window right. We had the down, the up, the down, 3 signals. We had the double red dots, and look, even if one engaged the trade at the close of that bar, 24.5. Right? It resolved to a 15, 16 point trade. That's incredible. That's $800 for one contract on the ES. Off of the triple S PTC pattern. And remember, when we're looking at the triple S lines in the upper half of the channel, we're not looking for longs. We're looking for shorts. We were left with the down. Now, I have another question. For those that were in the session yesterday, the Triple S session yesterday, did what you learned yesterday or have latently learned, as I communicate, and what you're seeing today, is that not like magic? For me, I feel like a kid in a candy store every time it happens. And I'm not trying to sell anything. I'm just going, it worked again. And exactly, Fuad, it's just like on the TRP. You're right. You're right. But it's just like magic. It's just like, but it's not, right? It's just pattern behavior. So at this stage, we're getting very close to the very last minute of the move, and we've moved down as forecasted into the end of the hour. At this stage, I would rather flatten out any positions that one may be in on the short side. There's probably one more dip down that can happen at the top of the hour that can take us down to the fast speed line on the hourly chart, and that is 100 points lower. So that could happen. This could also be the reversal area, which, look, we forecasted the short on the NQ below 28,115-ish. That was Mark S's line, down to the 50 to 30 area, 28,050 to 30 area. We got a little more than that. I think we came down to like 20. So that it all worked out perfectly. And, I'd rather bank and take it to the bank rather than force myself to stay in a position into the end of the hour. And George, for the Triple S session this afternoon, you're going to get an email. So you should get an email. Check your junk spam promotional mail folder. Make sure that you check that. And we're going to take a break at the top of the hour now for a few minutes. I'm going to just ask the team. Okay, I'm going to ask the team, our client relations team, what's going on with that, so I can report back and let you know. Sleepy Trader, that's great. Is it okay if I read that out to everyone? You let me know, because I think that's a great way to end the market morning. Okay, so Sleepy Trader writes to me, for me today, the best trades were had during the first 30 minutes of the open. I focused on the process, not the profit, and let my winners slowly build. My tip to new traders, hide your P&L, both open and realized, off the screen, so it doesn't mess with your head and distract you. Just plan your trade and trade your plan. Man, you should be writing a book there, Sleepy Trader. So there's the whoosh that's happening now as we change the hour, which is not foreign, right? It's happened. Obviously, as the hour changed, the fast speed lines moved. We already got the marker. 27,975 is where it could come down to, 975 to 950. But the expectation would be a bounce up off of there. So I'm going to take a break for about 5 minutes or so, and then I'm going to come back. And my focus is not, and you're getting lots of thank yous, Sleepy Trader, from folks around the world, actually, for that statement. So there you go. What I was going to say was I'm going to take a break for 5 minutes. I'm going to come back. And what we do in the last 30 minutes or so of our sessions is really about dotting the I's, crossing the T's, getting your questions answered. If there's trades available, of course, I'll try to find some trades as well. But what I'll do is I'll just pop up the little board that lets you know when I'm coming back. And we'll take a little pause and we'll come back in a handful of minutes or so. If you've got questions, you can start writing them into the chat now. That's absolutely valid. You can wait until I get back. Whatever you choose is fine. Let's see how long I need right now, because I got to do a couple of things. Let's call it 10:08, 11:08, sorry, for those in Eastern time. Okay, so I'll be back at 11:08. Let's take a little break. And get your bio break in, get your beverage, and if you have questions, get those questions written out and ready to put into the chat. I'll take them as soon as I'm back. All right, folks. Thank you for your support, time, effort, energy. For those who have to leave, I understand. Those who are staying for the back end of the session, I'll be back at 11:08 a.m. Eastern time. Stay tuned. All right, folks. So let's get the engine started again. I am back. Just took a little pup for a bathroom break. Got mine done too. So we should be all good to go. So let's get back on the horse. I'm just waiting for a response back from the team over here. Oh, perfect. Okay. So Gary, gotta love Gary. Thank you, Gary, if you're listening. But I just got a response back saying for those of you that are triple S students, okay, for those of you that are triple S students, whether you became a triple S student yesterday or you're an existing triple S student, I'm doing a special session from 2 to 5 p.m. today. It's a recorded session where we can stress test the indicator and the patterns, and you can ask me all types of questions, and we can do lots of fun trading and good learning. So that link to that session is going to be emailed out at around 1 p.m. Eastern time today. So check your email inboxes at 1 p.m. Eastern time today. Triple S students, just confirm for me that you got the message in the chat. You can just give me a letter Y for a yes. Let me know. Okay. And off we go. And Fuang, Fo Vuing. Okay, I probably butchered your name, but look, everyone's butchered my name since I was born. So can you tell me how to phonetically pronounce your name? Because you asked the question, how do I get the triple S indicator? Sure, I'm going to be doing another session. Really? Okay, Vinti. Vinti. Perfect. Oh, Vinny. Okay, I can call you Vinny. Okay, I'll call you Vinny. Perfect. So Vinny, I did a session yesterday where I shared with folks intimately the triple S indicator, the tools, the pre-trade conditioning pattern, which remember John G. Gave me a little heads up again saying, hey, your PTC patterns happening on the 1 minute chart on the ES. It happened. It went live at 24, 74, 25, 24, and it yielded a result down to 74.06.05 in that area. A 20-point trade off of a 1 minute chart in a very volatile market. Incredible pattern. So for those who are already triple S students, you obviously are taking advantage of this kind of thing. You saw me take a small piece of the move. I shoulda, woulda, coulda, right? But for those that want to become triple S students, we did a session yesterday. I made an offer yesterday for folks to acquire the indicator. So Vinny, if you want to acquire the indicator, I've been asked to do the session again on Saturday. So it's going to happen again on Saturday. So I might as well bring that up in front of you right now and give you the link. Hold on. I'm just trying to find it. There it is. Got it. Okay, perfect. So if you want to join in on Saturday, you're more than welcome to. Okay, you're more than welcome to. The link will be in your chat in just a second. So I'll just put it into everyone. Okay, the link is in your chat. It should be at least at this stage. Okay, so you can join in over there. Sleepy Trader, I love Denzel, man. So I see what you just put in the chat. I know it's probably in response to someone else, but it always makes me smile when I see Denzel. Okay, all right, folks, let's get to focusing back on you and what are the things that are important to you at this stage. And OM, I see you're asking, will this be on Wealth Charts, my email? Okay, it's not. It's going to be direct email because it's a private session, right? It's for those that are triple S students or that have become triple S students as of yesterday or have already been in the fold. So I want to, just want to say, hey, check your email or just write into support@wealthcharts.com and let them know that, hey, you own the triple S and you need it. And Emma, it will be recorded. Yes, that's the beauty part of this, right? So one of the things that I wanted to make sure, let me just see if I can pop it up on the screen here. Let's see if it pops up. Just need to log in to my account and I'll pop it up for you. So the Triple S indicator has a resource center, right? So the resource center is something that you'll be able to access directly for for the replay. And I just need to get to that resource center link. Give me a second here to find it. I got it. Perfect. Okay, so that's the resource center. Okay, I'll copy and paste the link into the chat. And what you'll get effectively is after I do the session from 2 to 5 today, it's going to be a live session, so we'll record it live, and we're going to stress test the indicator. We're going to run through a bunch of drills. We're going to trade blind. So we're going to effectively do something that's pretty darn cool, where I'm literally going to, we'll pull up random scenarios that I have not prepared for, and I have not prepared for, I've not sat back and done a bunch of random simulations. We're literally going to just hide price completely. You know how Sleepy Trader was saying hide P&L? Not only are we going to hide P&L, we're going to hide price. And we're going to just use the subchart, which is the Triple S indicator, to make trading decisions. We're obviously going to do it in rapid fire, and we'll do it over and over again. And we'll, really deconstruct, when to be long, when to be short, when to add to the trade, when to back away from the trade. We'll do it in rapid fire using the Wealth Charts Trading Simulator, which is going to be a whole bunch of fun. In fact, if you actually go to the Resource Center, you'll see that there's a ton of videos already that are done, maybe not a ton, maybe a few, where I stress test the indicator without looking at price, and I just go in and I randomize examples, and I have no clue what the outcome is going to be. And I literally just use the subchart to trade, and you can see the results are actually pretty darn good. Now, that's going to be a bit of fun, but I'll leave that there. And yes, it will be recorded. It'll be placed in the Resource Center, Emma. Now, I want to, I'm happy to hear that, Killer Learner. Okay, we'll see you then, for sure. We'll see you tomorrow, too. I'll be here tomorrow, too. Deb, what are you saying? Triple S indicator trading today? It is, the training is today, right? So from 2 to 3 p.m., 2 to 5 p.m. Eastern time. It'll be recorded. I got to pace myself because I'm going to take a little break at 11:30, and then I'm on Wealth Charts for an hour from 12 to 1, and then I'm doing the session from 2 to 5. So I don't want to stress myself out too much. But, it's always nice to, and today's link for the session, OM, is going to be emailed out at 1 p.m. Eastern time. So at 1 p.m. Eastern time, look at your email. It'll be there for you. Check your junk spam promotional mail folders. Okay, questions. The whole point now is I'm here to answer your questions. Richard B., thank you. Where is the flight path going from here? Excellent question. Let's get that answered. Thank you, sir. I appreciate it. How long have we known each other, Richard? Probably going on a decade now. Probably going on a decade. Okay, let me just get that flight path pulled up. Yep, it's a decade. Okay. And it'll be in the Resource Center, Anka. It's not going to be on BBT. It's going to be in the Resource Center for Triple S. It will appear there after, right? The recorded version will appear there after in the Resource Center. The link to the session will be emailed out at 1 p.m. Eastern time. Okay. So let's get to the flight paths. Okay, so where are we going from here? So I derive directionality on the market off of the S&P E-minis more than the NASDAQ. And the Resource Center, I'll put the link into the chat, Anka. So it's going into your chat right now, right? So there it is. That's where the recording will be, okay? So you should be good. Okay, just let me know if you're good. I know it gets nerve-wracking if you're trying to learn something and you don't know where the resource is and you're like, where am I going to find it? I want to make sure I take care of you, so I'm here for that. Okay, so here it is. What I want to make sure that you hear, Richard, and to everyone else that wants to know directionality from here is we're in a time where the market is in clear transition, but still receiving major event announcements, earnings. So Apple and Amazon are to come. We've already come down towards the bottom of our weekly pivot range, below it for the NASDAQ, and almost to it for the ES. I think the bounce up is into the mattress. I don't think that we're going to see tremendously more than that. There are two scenarios from here: up to the 74.60 area, or up to the 75.50 area, or right, we could end up seeing both in stages. So this is the 75.55 area. This, of course, is the center of the weekly pivot range, which I refer to as the mattress. And let's just call the center of it 74.60. So up to that area would be the next likely leg of the move. So for those of you that are concerned with directionality overall, that's my answer. Where does it go from there? I think down, but that's probably the next move, and it's probably something that gets driven by the earnings after hours. Look, Amazon is probably going to release earnings and demonstrate that there's stress on the consumer, but they're going to have other parts of their businesses that are actually blooming because everyone's going to them for infrastructure. So I actually think that they're going to show a positive and go up in the after hours. And Apple is, it's much more likely that they're going to provide a gift to the market by way of distribution. Exactly, Fuad, AWS, exactly, right? And Apple is much more likely going to provide a gift to the market in terms of how they're allocating capital. They've got a lot of new things that they're trying to come out, right? They're trying to come out. And new products that they're trying to launch, like foldable phones, all this kind of stuff. But really, the next big phase is not the hardware product; it's the software product. It's the AI side of it, obviously. And Anka, I see you're still having some problems. So here it is. Okay. The only way that you get to that is if you are already a SSS student, right? And you have permission for this. If you go to that link and you're not able to log into the BBT site, you need to get, I know you are, so, you're telling me that. So then you have to write into support@BBT or becomebettertrader.com or call into the office, right? The number's up there, and go, hey, I'm a SSS student. Can I have permission for the resource center? Because you should already have that toggled on. Okay. And at the same time, while you're writing in, I'd send an email first. Make sure you're on the list to get your link for the session this afternoon. Okay. All right. So that's that. So Richard, my thought again on the S&P E-minis is that we're probably going to come up and try to make that move up into the mid 7400s to mid 7500s as the next major move, and then down from there. Just right into so Dave T, just write into support at becomebettertrader.com. Just write into support over there, and they'll take care of you. And Alan R writes something important. Alan, thank you for that. So Anka, Alan wrote to me, he had to log out and then log back in to get the resource center popping up, because you should automatically be permissioned for it. So thank you, Alan. I appreciate that. And thanks for the compliment earlier. I appreciate that too. All right. So Richard B, back to your question. I want to make sure that, that's the I's are dotted, the T's are crossed. We're in a sell signal state. We're in a market that's been in a topping process for a while, but it could be consolidate to continue. I came out back at the earlier part of July and I provided my forecast for the market, but it has been stressed. It has not worked out the way that I thought it would. I thought that we were going to make a move to the top of the long-term uptrend channel that goes back all the way to October of 2022, have some indecision over there, and then fall to the bottom. We've fallen to the bottom first. Are we going to come all the way back up to the top? That is now doubtful. That is unlikely. Like Anthony was saying earlier, flight paths last week were very stressed. It didn't work out the way that I was expecting. And I get lots of notes from lots of folks that I've engaged with, and lots of folks that are swing trading are finding inconsistencies in this market, as they should. We've been going sideways since the back end, really the back end of May. We've moved into a range, right? So there's your boom after the 10% correction in March. April was the boom, and then we had the continuation into the back end of May, and then we started to flatline, go sideways. And you can see the oscillating signals, right? This is a daily chart of the primary market. Down, up, down, up, down. This is not the pre-trade conditioning pattern, but this is a piece of evidence that there's a transition afoot. Now, a couple of the notes that I can make over here is typically when you're in a market that's in a range that is a topping range, you need a duration of trend that says it's mature, it's late stage. We had a 10% correction into the end of March, and then we started another uptrend for 2 months. Typically, at an index level like the S&P level, it's about 6 to 8 months that would be considered late stage. So one of the pillars of my argument has been we are not in a late stage uptrend. We're in a consolidation zone, consolidate to potentially continue higher, right? And continue higher temporarily, because what we're intersecting with are three big forces: geopolitical negatives, overvaluation from a fundamental standpoint, where the stress is going to come out on the fixed income side, on the bond side, on the credit side, the amount of money that has had to have been borrowed or has been borrowed in order to build out, right? This is kind of like for those who are trading back in 1999, right during the dot-com, dot-bomb, the amount of capital that was borrowed to build the infrastructure, to build the fiber, to build the cables, okay? This time is a little different, but that is a stress on the system, right? The more your balance sheet skewed with the credit side rather than the equity side, the idea very simply is as soon as there's a risk that emerges that's unknown, like a geopolitical risk or like a cost increase, like oil skyrocketing, for example, all of a sudden it's hard to repay that debt and things start to come unglued. The more credit that is taken on to grow for the future, because everyone's competing and racing, to be the best at it. At a sovereign level, US versus China, at an individual company level, the more credit that's taken on, it skews the balance sheet to the point where any small risk that can emerge, it's like the feather that drops on the camel's back and breaks it. So we are in that environment now. In no uncertain terms, we are in that environment. But we're also in an environment where the unknowns of how much productivity can be produced from the next step up in AI, that will be what? Will it be about robotics? Will it be about healthcare? Will it be, I don't know. I'm not going to speculate. I think we are obviously at the biggest discovery in history of mankind at this stage that can change the way that we live forever. And I think that companies that are going to take advantage of it and commercialize it is definitely priced into the market. I think the unknown of what the new step up can be is not even at all priced in. And it can change the game completely. Imagine no disease. Imagine taking a pill that's able to cure, horrible ailments that, my family members have died from, that I'm sure many other folks have suffered from. Imagine extending your life by 50% in terms of years. That's what we're at the precipice of. So when we're trading a market, bringing it back down to earth, right now, I think we're overvalued. The things that we don't know, the unknown unknowns are probably going to be amazing for valuation moving forward. But that's not what we're dealing with right now. What we're dealing with right now is a market that's getting so skewed and overloaded with credit that small things can become the feather that breaks the camel's back. And look, we're headed into August, September. September is typically a very volatile period of the year. It's a volatile month. Do I expect some downside? Yeah. What do I expect? Let's just make it really basic and really powerful. Hold on. I think the best way for me to do it is this way. I'll just make the on chart full screen. Okay, so we've got the tariff tumble, okay, and we've got the March Madness as the two drops. The tariff tumble, obviously deeper. March Madness was about 10%. If we just theorize that we have gotten to the point of extreme overvaluation and it's less likely that we're going to have sustainable higher highs, we're not getting a Fed put, right? We know we're overvalued. We know the market's skewed to expensive credit. And we know that if we're going to grow at a faster pace at this stage, people need to be able to borrow more or get paid more so they can buy more. Okay? And we know that energy has taken a big chunk out of this year's disposable income. Not to mention other things that have happened, obviously, but my view is that the consumer is not as healthy as one would imagine. And the labor market is, the no hire, no fire type market. That does not spell out growth. That spells out towing the same line. And we've got geopolitical negatives, overvaluation, no Fed put. We're going down. And is it going to be a tariff tumble like this one? I doubt that it's going to be that harsh. But if we do a basic Fibonacci retracement, okay, the golden ratios, and all I'm doing by putting this on is saying this is what other folks are probably looking at and theorizing, with as well. Let me see if I've got a cleaner way of putting this up. Hold on a second here. Let me do it this way. I'll just make it a little easier for us to see. That's about it. Okay. So I'm just roughing it in. Obviously, I've not got to the exact numbers. But if we're going to retrace on the way back down, a 50% retracement would not be off base. Okay. From where we are right now, and this is something that goes through August and September. This is not about tomorrow. It's not about this week. It's not about next week. It's about the next couple of months. Okay. Look at the number that pops up on the screen. And by the way, I'll quote the statistic. 15.63% of a move down is typically where you get the government apparatus coming in, like the Fed, to start putting a floor under the market. Because if they're going to achieve their goal of whatever, 2, 3, who knows, 4% inflation, whatever their goal is now, and full employment, they're going to achieve their goal. It has never been able to happen with the stock market moving down. And if the stock market moves down more than 15.63%, things get really ugly. So from where we are right now, this is about a 16% move down, roughly to the 50% retracement marker, 62.41 on the ES. That is fair game. That's fair game over the course of probably August, September. Okay, so that's the very long answer to your very good question. I don't know if I have other questions, but I'm out of time and I've got a long day in front of me here in front of you. So I want to make sure that I take care of myself to take care of you. So I'm just going to scan through the chat really quickly now and get a sense of what folks are saying. And Charles, that's a great statement. The market can remain irrational longer than your account can remain solvent. We are in that time, right? But you've got geopolitical negatives. This is not going to end well, even when it ends. US Iran, it's not going to end well, right? The whole US Iran is the same. It's about dominance globally for power, generation of power, right? So where does China get their power? Iran, Venezuela, okay, Russia. Where does China import that power from? The areas that the US is taking off the chessboard for them, right? This is all about power. Power for what? Power to generate power for the infrastructure for AI so they can dominate. That's what this is. That's a fundamental undercurrent of what we're dealing with here. So in any case, I don't want to philosophize here. I just want to simply get back down to brass tacks and say to you, if you look at seasonality, if you look at patterns, if you look at what usually happens, September is usually a down month. And this time is unlikely going to be much different. Is that move coming for us? Potentially. And are we going to get a move up before that? I think the up move is muted before that. The up move is muted, right? We had the opportunity to move up for a while now, and we haven't done it, right? We haven't done it. We've been in a downward move since the middle of July on the S&P E-minis. We've broken some structures. We're coming up back. We have come back up above the center line of that long-term channel. All that's good. But coming back up to make new all-time highs, driven by Apple and Amazon's earnings? No, I highly doubt that that's. And Rajan, excellent point. Midterms, right? That's another big piece of the puzzle. There's always going to be so many moving parts. We reduce it down to something that we can actually digest and work with when we use charts and patterns to help understand them. And my insight to you here is that, look, I think that we can come up to the mid to upper 7400s at a bare minimum through Apple and Amazon, and then we'll have to assess. On the high side, it would be the 7550 area and then down. There's the answer. All right, folks, did you have a good time this morning? Were you able to get something out of this morning and walk away with it and go, okay, that was a valuable spend of time? Whether it was earning, whether it was learning, whether it was a combination of both, I hope there was something there for you. Looking forward to seeing you on Wealth Charts at 12 p.m. Eastern time for a 1-hour session. Might end up making it about 45 minutes, but I'll be there. And then I'm looking forward to the dedicated Triple S session at 2 p.m. Eastern time, where you will get, if you're a Triple S student, existing, new, you're going to get a link emailed to you at around 1 p.m. Eastern time today. So check your email, and we'll see you at that session this afternoon. All right, folks, I hope that you had a great time. I always have a great time being able to do this each day with you. It's always a privilege. So thank you for being here. Thank you for participating. Love that big lucky number 7 in the chat there. That's awesome. So thank you for taking the time to be here and being so engaged. I appreciate it. And I look forward to more with you each day. Have a great rest of your day. If I'm not going to engage with you for the rest of the day, I'll be back here tomorrow morning at 9:15 as well. For those that I'm going to see, I'll see you on Wealth Charts at 12, and then I'll see you in the private Triple S room at 2 p.m. Eastern time. Bye for now, everyone. I got to take a little break now. We'll see you on the flip side.